In a sole trader business, calculating your final profit for the year is the end of the line. But when a business has 2 or more owners, reaching that profit figure is only the beginning of the process. That pool of wealth now needs to be divided. To do this, accountants use a specific document called a partnership appropriation account, designed specifically to share the profits fairly among the partners. It does this by factoring in several specific partnership variables. It tracks how much partners are paid in salaries, the interest they earn on their invested capital, and the interest they are charged on any money they withdraw early. By the end of this video, you will know how to build a perfectly formatted appropriation account from scratch. You will also learn how to avoid the hidden formatting traps that frequently cause students to lose marks on their exams. Because a fair partnership requires strict accounting rules, following these steps ensures you prevent financial disputes and easily pass rigorous examiner scrutiny. This equation outlines the overarching formula that governs the entire document. You take the profit, add any interest on drawings, subtract interest on capital, and subtract salaries. That calculation gives you the residual profit. To put this into practice, we start with our blank appropriation account template. Step 1 is to bring down the starting profit for the year figure straight from your income statement. We will use a starting figure of $24,680. Next, we add the interest on drawings charged to the individual partners. We add this amount because it acts as a penalty that the partners must pay into the business for taking early cash withdrawals. By paying this penalty back into the firm, the total profit pot actually gets bigger. You must be careful here. Notice the highlight on the word interest. We are adding the interest calculated on those drawings, not the actual total drawings themselves. Charging interest on these early withdrawals directly increases the total wealth available for distribution to everyone at the end of the year. Once the total pot is finalized, the business must pay out specific guaranteed entitlements to the partners before sharing whatever is left. First, we subtract interest on capital. This serves as a reward, compensating each partner proportionally for the initial money they risked by investing into the firm. Next, we subtract any partner salaries. This deduction compensates specific partners for the daily operational work they perform to keep the business running. After all additions and deductions are made, we draw a sum line. The resulting number at the bottom is the residual profit. Finally, we divide this residual profit between the partners based on the profit-sharing ratio they legally agreed to when forming the business. Handling the math in this sequence ensures every partner is fairly compensated for their specific individual contributions first, before the general leftover profit is split. Having the math right is necessary, but a mathematically correct account will still lose major marks if you break the formatting rules examiners look for. Looking closely at these rows, here is your first warning. Initials are completely banned. You must write out the full names for every partner entry, like Sumit and Padma. Otherwise, the examiner will penalize you. The second warning is about placement. Actual raw drawings and current account balances must never be placed inside the appropriation account. As we can see on this split screen, the structural drawings and accumulated balances belong exclusively inside a separate ledger, known as the current account. If you try to list raw drawings in the appropriation table on the left, it is an automatic error. You must move them over into the current account ledger on the right where they belong. Mastering these boundaries proves to the examiner that you understand the difference between distributing macro profits and tracking individual ledger balances. Here is our completed document. It shows a clean layout, accurate mathematics tracking from the top-line profit down to the individual shares, and strict adherence to formatting rules. You now possess the exact framework needed to safely transition a business's total profit into an individual partner's pocket. To lock in this skill, head over to studybuddy.tech right now to download our free practice templates and problem sheets. True accounting mastery requires exact calculations, but it relies entirely on presenting those numbers flawlessly. Keep practicing and your results will show it.